Our project's investment portfolio consists of stocks from US-based companies, Marathon Oil, and Ford Motor Company. In addition, we have ADR stocks from Japanese automobile maker Toyota and United Kingdom's British Petroleum. We have invested a total of $40,000 and have distributed the amount evenly throughout the 4 companies. We have tracked the stock prices from February 2nd to April 19th, well, in addition to world events that might affect the companies. In regards to the stock price percentage change, Ford Motor increased by 11.72%, while Toyota decreased by 9.75%. British Petroleum increased by 7.44%. Marathon Oil increased by 45.28%. Overall, our portfolio averaged an increase of 13.67% in the span of our observation period.
There are 3 reasons why Ford stock has gone up, which is a high current yield, a favorable economic scenario, and a cushion in the risk or reward aspect that all point to an increase in the stock over the period. Backed by a strong dividend growth rate, the record performance in 2015, the stock is poised for an excellent upside. Ford also has an efficient method of production which recycles 20 million pounds of aluminum scrap per month, which is equal to 30,000 F-150 bodies. This is one reason why they are number 1 in monthly sales this past quarter. 2016 will be a tough year for competition to beat, which is to be expected due to the newly developed aluminum F-150 body frame. The main reason why Toyota has a stock that has gone down is due to Toyota running short of key parts used to make its vehicles. This is because of an explosion at a steel plant owned by a key supplier. The explosion due to an earthquake happened on January 8th, which damaged a key furnace and shut down production. That left some of Toyota's parts making operations temporarily short of steel. Forcing them to reduce their production, the supplier's plant is expected to be shut down until late March. Though the company is moving to replace its lost production, there has been a gap in supply. As a result, Toyota car-making factories in Japan will run out of certain key parts within a few days. Toyota said it will close all of its Japanese assembly plants for 6 days, from February 8th to February 13th. To give its parts-making factories time to catch up. This is a big reason why it has hurt Toyota's stock, though this is a short-term problem and should be resolved in the coming months.
The steady rise in oil price per barrel from $29 per barrel to $45 per barrel of crude has given an improved outlook for the oil companies Marathon and BP. This steady rise in the price per barrel has a positive effect, leading to a $4.22 rise in stock prices for Marathon, which is a 45.28% rise in stock price. This is attributed to Marathon's low beginning stock price during the sample period, as it began at $7.66 and grew to $13.54 per share. However, BP, who has a stronger stock price around $30, it was less affected by the upturn in price per barrel, as it only rose $2.16, resulting in a 7.44% bump in stock price.
According to the graphical evidence by Yahoo Finance, we can state that Ford Motor Company stock price is indeed driven by the U.S. stock market. There are multiple dates in which the stock price demonstrates a positive correlation with the market prices. Between the dates of February 12th and February 19th, we can clearly see a very similar behavior between the stock price of Ford Motor Company and the market's S&P 500 index, concluding that the U.S. stock market, in fact, does significantly influence the price of Ford Motor Company's stock. Looking at the graphical and statistical evidence from the comparison of the market and the Marathon Oil stock price, the Marathon Oil stock price is experiencing an intense variation during the observation period. However, it is also exhibiting an average rise, which is surprising due to the fact that the price per barrel of oil is at an all-time low. The U.S. stock market is at a gradual increase without exhibiting dramatic fluctuations. Therefore, we can conclude that the U.S. stock market significantly influences Marathon's stock price.
In regards to British Petroleum stock price and the United Kingdom's market, we have a similar situation. At a glance, the graph shows clear behavioral patterns that would indicate a significant influence. However, VP has significantly higher variations during its declines and inclines. VP stock price is much more volatile during the time frame, but indeed does follow a positive correlation with the British market. We can conclude that the British market drives British Petroleum stock price to a substantial degree. The graph comparing Toyota Motor Company's stock price and the Japanese market illustrates the positive relationship held between the prices. The graph clearly exemplifies the behavioral pattern shared by this stock in its local market. Through the dates of February 26th and April 19th, we can distinguish the likeness of declines and inclines occurring simultaneously. As a result, we conclude that Toyota is definitely driven by the Japanese market. The correlation between the British Petroleum and Toyota Motors stock prices is negative 0.133. The correlation coefficient informs us of a very minimal negative correlation between the two companies. However, if we analyze the graph, we can see a graph that illustrates otherwise. There are time frames in which it illustrates very positive and correlative behavior. The coefficient could be giving us this correlation because of the limitations we have placed on data collection. So ultimately, we must conclude that the foreign stock prices display a positive correlation. Toyota Motor Company's stock price and the US market have a negative 0.45 correlation coefficient. In addition, the graph visually lets us see that the US market improved. Toyota's stock price declined toward the latter part of our observation period. Ultimately, we have to state that the US market had a negative effect on Toyota's stock price. In regards to British Petroleum and the US market, they share a positive correlation coefficient of 0.59. The graph also exemplifies the positive correlation by showing us declines and inclines at the same time periods for both prices. The larger variation in VP's price are due to the volatile nature of VP's industry. Ultimately, we have determined that the US market significantly influences VP's stock price.
Ford's second largest market to the US is Europe. Roughly 1.5 million wholesale units were sold in Europe in the 2015 calendar year, representing a 23% share of wholesale volume globally. There does not appear to be any correlation between the fluctuations of the euro and the performance of Ford stock during the sample period. While there were periods of similar movements, Ford stock has been mostly influenced by the highest US sales volume since the recession and low fuel prices in the US as discussed earlier. Marathon Oil's second largest market is in Africa and Equatorial Guinea. Marathon owns majority stakes in multiple businesses there. The value of one Central African franc has less than a fifth of 1 cent value in US dollars. There was such a minor fluctuation of the currency over the sample period that the currency fluctuation graph appears as a straight line. Because of this, we conclude that the currency fluctuation had no effect on Marathon's stock performance in the US.
There appears to be no fluctuation in stock price directly related to the currency exchange, with no apparent volatile cash flows. The transaction exposure is minimal. For the yen to over US dollar, Toyota is safe with Japan's exchange rate change of 0.0088 to 0.0092. BP as well is safe with the British pound over US dollar, the change only being from 1.4405 to 1.4342. The economic exposure would not be observable due to its long-term application and our very short-term sample period.